Gerald Lucas here with another installment of Ask Gerald, where you get your real estate questions answered. Today's question comes from Rajiv, and Rajiv writes from Edison, New Jersey. And Rajiv writes, do you think the bank failures that happened earlier this year will affect housing? It's a good question, Rajiv. You know, the largely non-regulated non-banks or shadow banks control almost half of the world's financial assets right now. And of course, these non-traditional lenders or shadow banks were at the center of the global financial crisis when questionable mortgages were transformed and weaponized into complex securities and then resold, and it almost brought the global financial system to its knees. And the mortgage market now is certainly different than it was before the global financial crisis. Good news is that underwriting standards are much more thorough and robust than they were then. However, mortgage market is different also in the sense that now 2/3 of all mortgage originations come from these non-bank shadow banks, not from traditional banks. And unfortunately, these non-banks, these shadow banks, are not as well capitalized as bigger, more highly regulated banks. And what that means is that, they probably don't have the capital to absorb an unexpected shock or liquidity crisis. And if, for example, their warehouse lines of credit, which is where they get their money in order to lend, if they were to dry up in a liquidity crisis or an unexpected event, then it could make it a lot more difficult and expensive for home buyers to get home mortgages. So thanks for your question, Rajiv. For more real estate tips and information, visit my blog at geraldlucas.com. I'm Gerald Lucas, and I'll see you again soon.